The Interpretation of Financial Statements Key Points by Benjamin Graham. 1. Understand the basics of accounting. Benjamin Graham stressed the importance of understanding the fundamentals of accounting when interpreting financial statements. He believed that without a thorough understanding of the basics of accounting, investors could easily be misled by financial statement numbers. 2. Look beyond the numbers. Graham cautioned investors to look beyond the raw numbers and to consider underlying economic trends when evaluating a company's financials. He believed that looking solely at the numbers could lead to misjudgments about a company's financial health. 3. Consider both qualitative and quantitative factors. Graham advocated for the use of both qualitative and quantitative analysis when interpreting financial statements. He believed that combining these two types of analysis could provide an investor with a more complete picture of a company's financial health. 4. Take a long-term approach. Graham encouraged investors to take a long-term approach when analyzing financial statements. He believed that short-term fluctuations in financial performance should not be weighed too heavily when assessing a company's overall financial health. 1. Understand the company's financial position and performance. Analyze the company's balance sheet and income statement to get a clear picture of its financial position and performance. 2. Understand the company's key financial ratios. Analyze the company's financial ratios, such as price to earnings, price to book, debt to equity, and return on equity, to assess its health and potential. 3. Analyze the company's sources of financing. Analyze the company's sources of financing, such as debt, equity, and cash flows, to determine the stability of its financial structure. 4. Examine the company's cash flow. Analyze the company's cash flow to determine its ability to generate cash and its ability to meet its obligations. 5. Assess the company's management. Evaluate the company's management team to determine its ability to make sound business decisions. 6. Analyze the company's historical performance. Analyze the company's historical performance to assess its future prospects. 7. Compare the company's performance to the industry standards.